We did have one question come in that I wanted to address before we sign off on today's call. And that is, the question was basically, is it risky to buy and hold stocks now with the likelihood of a big correction around the corner, especially because it could take years to make up these losses? So I will say I appreciate that question, and I always think that it's important that you protect your wealth. And we are in a bull market right now, but of course we don't know when the next bear market will come. I do think that it's actually more risky to be out of the market during these bull market periods. Now, we might say this that we don't deserve to have a bull market. Maybe you look at the risks on the horizon and you say the market shouldn't be trading higher. But here's the deal. That's not what's happening. The market is trading higher. It is rewarding investors for being in the market right now. And as we said at the beginning of the call, when you have these periods of strength, they tend to continue until some kind of crisis or some kind of issue causes these markets to trade lower. So I think that you need to be invested right now. You need to be diversified. You need to be balanced, which means it's important to have some positions in precious metals. It's important to have some position in real estate. My home is one of my largest investments, and it's holding up relatively well, even with higher interest rates. So you should never bet the farm on any one stock or any one area of the market, but having a diversified and very balanced investment picture will allow you to make money during these bull markets, and it will also help you to protect your capital when the market does trade lower. Now, thankfully, we do often get plenty of warning signals when the market's going to trade lower. We don't go from just being in a bull market to immediately dropping 20%. We start to see these issues on the horizon, and you're able to typically get your money out of risky positions and put them into safer positions along the way. One thing I will remind you is that we focus here at Lifetime Income Report Pro on income plays. So, of course, we do have some growth plays that will we expect the stock to trade higher. That's part of the added benefit of Lifetime Income Report Pro. But at its core, we like to invest in stocks and other investments that pay cash flow month after month, quarter after quarter, year after year. And this is important if you think that the market may be having a pullback. The companies and the stocks that pay dividends are ones that typically hold up much better in a bear market than other stocks like growth stocks. So while the overall market might pull back 20%, you might see your account only pull back by 10%. Meanwhile, that income that comes into your account month after month, quarter after quarter, year after year, can be put to work buying shares of stock at a lower price. So if your favorite stock trades lower, you're able to use that dividend payment to then buy new shares at a lower price, which means you get more shares for the amount of money that you were just paid. And then once the market recovers, you're able to make that recovery back much more quickly because you now own more shares that are moving back higher. So I think it's very risky to actually pull your money out of the stock market during a bull market. I just think that you wind up missing too much of the move and missing too much of the opportunity to grow your wealth. So my recommendation as a broad measure would be to be diversified, be balanced, do have some cash, but make sure that you are participating in the gains that the market gives you, because now is a time to be growing your wealth versus the time to protect your wealth is when we're actually in a bear market and when stocks are trading lower.